Limiting the rise in average global temperatures to 2 degrees Celsius requires a huge shift in investment towards low-carbon, climate-resilient options. The longer we wait to act, the higher the cost will be, both financially and for the environment. Following the financial crisis, we can't just rely on traditional sources of capital such as governments, banks and utilities to finance green infrastructure. Investors like pension funds and insurance companies hold more than $83 trillion in assets in OECD countries. Assets like wind farms would be suitable for their long-term investments, but not even 1% of large pension fund assets goes directly into infrastructure, let alone green. Policymakers are increasingly taking action to encourage investment in green infrastructure. For instance, at least a dozen public green banks are attracting private financing for projects like offshore wind farms and energy-efficient buildings. Technology is helping too. Every dollar invested in clean energy today could generate $3 in future fuel savings by 2050. But much more needs to be done to steer public and private funds into areas like clean energy, public transport, and electric vehicles. Governments need to send a clear and consistent message to investors, producers, and consumers on energy policy. The aim should be to put a price on carbon, phase out fossil fuel subsidies, and correct the market bias that favours dirty energy over clean. The OECD is helping policymakers to achieve this goal. Mexico and Indonesia have recently introduced such policies. Climate finance must also aim to help societies adapt to the effects of climate change, especially the poorest, who are often the most vulnerable. This includes better planning to build the right type of energy, transport, water, and building infrastructure. Plant the right crops in the right location. Mobilising climate finance in developing countries is also crucial if the world is to meet its climate goals. The OECD works with donors, international financial institutions, and aid recipients to improve tracking and information on climate finance. This is creating greater transparency, accountability, and trust.